on to our next set of presentations, and may I please request Mr. Kavan Mukhtyar, partner PricewaterhouseCoopers, to kindly come back on stage for the next presentation.
So a very good afternoon to you all, and in this presentation we are going to share with you a little bit about what at PwC, based on some studies within India as well as globally, as what we see as the key challenges, trends, and the outlook, specifically in the automotive dealership business. So over the next 20 minutes or so, I will walk you through what we believe are some of the big changes that are happening in the industry and how does this impact the dealership community. First and foremost on the industry, clearly if you look at the passenger vehicle business over the last 4 or 5 years, of course 2012-13 was a great year. The next 2 years were a little bit lower, almost negative growth. But in the last year, the growth recovered, and this year again is turning out to be a great year. The two-wheeler industry has seen a steady growth. So this is something which really has been a big motivating factor for the whole industry, because two-wheeler growth eventually means that this growth will also eventually come to the passenger vehicle side. On commercial vehicle, again, much better than FY 14-15, but still the growth is on a slower track. Now let's take a long-term view of things based on our own assessment, and if you look at the automotive mission plan as well, India is going to be almost like a 6 million car market by 2020, and I mean this is a fairly optimistic view, some would say. But if the economy picks up, then this is indeed possible. And I think in the overall context is also important to note that almost 12% of the GDP is contributed by the auto ancillary and related industries. So this is something which is an industry which is also high on the government's radar as an employment generation tool. Of course, there are some challenges related to emission, etc., but I believe these will get addressed. In short, what we are saying is that the outlook for this industry is definitely positive, and it will continue to grow over the next decade or so. What are some of the other key things that trends that we see? Clearly, one big factor is going to be the Bharat Stage 6, which has now been confirmed that OEMs need to move to this by 2020. That's going to have an impact on the auto industry. Possibly the cost of vehicles may go up. Now coming to the dealership area, now focusing more on the dealership. One of the big, and there are a lot of things on this slide, and in the interest of time, I won't cover each one of them. But one point that I want to really talk about is the high attrition rate. We have worked on several projects with the OEMs where we find that the key challenge is that the attrition rate at the dealership is so high that even if they provide whatever training, by the time end of the year, the guy is gone. So they have to start that exercise all over again. So at an overall industry level, our estimate is this is almost like 30 to 40% in some cases. Why is this happening? The reality is, especially you look at the sales folks, the structure of their compensation is very much skewed towards variable, and this needs to change. If you want to retain good quality talent, now you are competing not just with the other auto dealers, but with retail organizations, with malls and various other entities which may pay higher salaries. So I think we need to pay attention on paying the right, I'm not saying pay high, but paying the right salary to retain the right talent. Some of the other challenges that we find from a dealership standpoint, and this is based on interactions with many people in the industry as well, how do we grow and diversify our risk? We talked about, there being growth restrictions because the OEMs will have certain constraints. There have been enough examples, and some of them are already in the room here, of cases where people have expanded at a state level or even at a national level or regionally. So it is possible, if you have the conviction and the commitment you can always build a business which may be non-competing internally, but also gives you the ability to grow your capabilities. The other area is, the ownership structure and access to financial markets. This is something which we really have to keep in mind, because as I mentioned, your growth will need external capital. If you really want to become an organization that has like 40 or 50 outlets, you will need to have access to capital, and not all of it can be or needs to be self-funded. So you really have to think more about how we can structure our organization in a way that we are an attractive vehicle to get investments. And this can also be a great wealth generator. You look at some of the most wealthiest people in the world in the auto dealership business, they haven't made money just by selling cars or doing service, but also by getting the right valuation for their companies. So the other area to focus on is your service process as well as systems within the dealership, is it up to the mark? So, we typically use this process maturity model, and what we find is, on this axis here, on the x-axis, you have process maturity, and on the y-axis, you have process performance. And we find that, one starts off with an unknown situation, then you go on to understanding this framework, and then finally effective and to world-class. Most Indian companies or most dealerships in India, I would say, depending on where they are somewhere in the level 1 to level 3 zone. So there is a lot more that can be done by dealerships on their own to improve their systems and processes within their organization. We talked a lot about profitability. I would like to say that, the primary drivers for profitability, you need to look at your business from this multidimensional standpoint. There are internal forces, and there was talk about how inventory management is a very important element. Forecasting accuracy, what you are able to sell, and accordingly come up with the right kind of inventory plan. Having or eliminating inefficiencies that may be there in your system, whether it is in terms of the spare parts you stock, or the throughput that you get from your salespeople or from your service people. These are internal factors that are really important. Then you also have to be aware about external factors, including, how are you going to deal with competition? What really is going to be the impact of competition on your business? The key other issues that one needs to, look at is very clearly from an OEM standpoint, there will be an ask to increase your infrastructure investment. As OEMs are trying to differentiate from each other and deliver better customer service, they want the dealerships to be upgraded, and that will require investments in infrastructure. The other area is investments in technology. We were just recently working with an OEM that was rolling out a full-blown dealership management capability in all its dealers. And they would expect that the dealers invest on their part in upgrading their technology as well. The other big challenge is marketing cost. I briefly touched upon it. So, how do you get the right return on your marketing spend? I think that is something you need to think about as well. The other area, in the dealership business, and this is something which some dealers have done pretty well in, is the used car business. And you look at the US examples, of course, it's a lot more organized a market, and here things are a little bit more chaotic. But, the used car market is really a very interesting high margin opportunity. But of course, you need very skilled talent to buy and sell vehicles at the right price. So, this is something that needs to be included. And then how can we promote our service more effectively? A lot of dealers come up with their own service marketing packages to make sure that you retain the customers even in the post-warranty era. And how can we promote more part sales? Many of the dealerships have spare parts sales counters. How can we promote this, by going proactively in the market and building a network of independent garages that buy the genuine parts? Talking about some of the best practices, I think I have about 4 minutes to go, so I'll just touch very briefly on this. I already mentioned service marketing, employee engagement, network management, value-added services. I think that is a big opportunity which gets very under-leveraged in the Indian context. The other angle is, the OEMs will evaluate us, but are we really evaluating ourselves the right way? So we suggest that this is how you should you should have your own internal performance review system, where you look at all those elements that we talked about earlier in terms of business priorities. But broadly, we would break it down into your sales, service, spares, infrastructure, HR, your complaint redressal systems. So, keep reviewing your business from these different lenses and, identify what really are your weak spots. Work with your, dealership managers or the general manager to come up with an improvement plan, a yearly improvement plan on what are those areas that we are going to further build our capabilities in. And ultimately, when you do this right, it translates into better customer service, ability to expand into other geographies with same or different OEMs, and definitely ability to create wealth for your family as well as for all key stakeholders. Lastly, what I would like to say is, look at your business in two dimensions. One dimension is, how do you protect value? So do your basics right. Have the right kind of leadership structure and control, right kind of financial processes, and how can you enhance value? That's where you deliver superior customer service and superior customer experience to make sure that you service your target customer segment the right way. The other area is put some risk management and control systems in place, especially for those dealerships who are looking at expanding, who are looking at moving from owner-driven to a professional organization structure. You need to put the right checks and balances in place in terms of risk management before you really embark on that journey. So with that, thank you very much for your time and attention, and I'll be here. So if there are any questions later, I'll be happy to address those. Thank you.
Well, with that, let's move on to our next presentation. And for that, may I please invite on stage Mr. Amit Bhagat, partner, PricewaterhouseCoopers.
In fact, what we're going to talk about is GST. And this is one very radical, significant, large tax reform, which is not restricted to the tax aspects of your business only, but it impacts the entire business or a whole of business kind of a situation. That's the degree of impact it could have. Now, I'm sure all of you have heard about GST, and to a large extent, many of you would be quite familiar with it. But just to put the entire context here, we are currently working under a tax regime, or the indirect tax regime, which is very complex. It is kind of embedded with a lot of inefficiencies, both on the administrative side, the compliance side, the dispute that it gives rise to because of overlap of jurisdictions between center and state. So all these elements, and plus the central taxes cannot be offset against the state taxes and vice versa. So in totality, what we are currently practicing in terms of our indirect tax regime is quite inefficient and it's quite difficult to comply with, which in result increases the cost of our product and services. And to alleviate all these inefficiencies and to help businesses and also the government for that matter, a new tax regime is designed, which looks very much a reality now, which would replace all these current indirect taxes levied separately by the center and the state, and there would be one national tax, at least conceptually, which would be levied on supply of goods and services. So you would no longer have a tax on manufacturing or tax on services or various activities or transaction-based taxes that we have today. Some of the very critical points to note here is that there is an element of mischief which has been brought in the law under GST, which is totally unexpected, which is this concept of questioning your value. One, MRP-based valuation, which is applicable on, let's say, the spare parts, goes away. The valuation for paying tax GST would be basis the transaction value or the invoice value. But to complicate matters, they have brought in this concept of valuation, which means that your prices can always be questioned by the tax authority. Another concept which is again a difficult thing to comply with or to address is all types of supplies, even free of cost supplies, would be taxed. Now what it entails for us is that many a times we give some free gifts or some free services along with the cars that we sell. Now, will there be a tax on a notional basis or a deemed value of it? If yes, then what is that value? So these are practical difficulties that one would face. Plus, there could be supplies from, let's say you have two dealerships, one in state A and one in state B. Sometimes you may move goods from one branch to another branch in two different states. Now, how would those transactions be treated? What could be the tax on it? On what value? So there could be, with the the time that we have, I'm just alluding to certain aspects. So there would be a lot more similar issues if once you get down deep into your transactions and tax points. Again, the stock transfers, because it's a supply. Currently, when you transfer your own stock from one state to another state, there's no tax on it. But going forward, there will be a tax on even stock transfers. Again, there will be valuation issues. Now, this is more relevant from an OEM perspective, that the CST sales is the general model, and which is always a cost. So that cost again will be reduced because there is no need. The interstate tax will also be creditable. So that's another efficiency, and could bring about some changes in the supply chain structure, like warehouse consolidation, reduction of number of warehouses and all. So in the beginning I mentioned it's not just a tax reform. It impacts all aspects of your business. From a tax pricing perspective, you have to see what is your enhanced creditability, what is the impact of reduction in tax rate, what impact does it have on your P&L, what can you do with the additional margins or efficiencies that you have, and most importantly, because of these changes, your entire compliance process would change, which means internally, whatever systems that you use for compliance will have to undergo a change. And that's more or less an technology, IT side of it. And there's a lot of complication and a lot of changes required to meet the requirements of compliance under GST. So there's a lot of reconciliation which will need to happen. The data will have to be uploaded item-wise, invoice-wise, with the HSN code. So all these fields will have to be created on the technology side, in the tax master, vendor master. So all those aspects of IT processes and systems will need to be changed, and we have to ensure that it is so robust and efficient that it takes care of all the compliance needs, plus it ensures that there are no leakages or trigger points of any kind of controversy or non-compliance. So we have talked about the first part. Credits we talked about. On the commercial safeguard part, the example that I took, that the vendor needs to be compliant. If he is not compliant, you lose out, whatever be the consequences for him. So therefore, contractually, you should do two, three broad things. One, renegotiate your price. Number two, build safeguards in the contract that if there is any kind of adverse impact on you because of your vendor, you will be indemnified. You can put clauses like you won't pay the tax amount to the vendor unless you are ensured that the vendor has been compliant and your credit has been availed rightly. These are just examples what one needs to do. Then we have to also think about what would be the treatment of goods purchased and then returned. How will that be treated? Can you adjust your credit, or will it be seen as a fresh sale from the buyer back to the seller? And what do you need to do about it? The most important aspect, according to me, is the transition. One is preparing, the other is transition. The complication there would be that all your VAT or service tax assessments or returns can fall into the GST regime, because transactions would have happened pre-GST, but the reportings and assessments would happen even during the GST period. So you have to need to have your data parallelly for both compliances during that overlap period. So on 1st April, you would need to comply with GST, and for all transactions taken earlier, you still have to comply in terms of assessments and all, even beyond, even after GST is introduced. When the OEM sells goods to us, it has an excise duty element in it, which is currently not taxable, which is currently not creditable against my output VAT liability. Under GST, the stocks which would flow in from the current regime would be embedded with that excise duty cost. And when those goods are sold under GST regime, there will be a GST. But this tax cost which was there will become a cost there because it's still not creditable. And therefore, there's a lot of talk that for a period of a month or two, people would resist buying goods from the old stock, which has excise duty embedded cost in it. Now, on that account, the industry has represented to the government that this credit should be allowed. Otherwise, it will become like an impediment, a big impediment to the industry, and it's across sectors, across businesses. So that's one important thing to consider, but we have little control over it. When we moved from sales tax regime to VAT, a similar situation arose, and at that point in time, the states did allow some deemed credits on account of the sales tax paid on the first point. So we have a precedence. The central government at least is willing to accommodate this, but there is some resistance from the states. So we do not know, but this is something which is very important, and I'm sure the government will do something about it. Now, moving on to the compliances. So I mentioned that now this services centralized concept will go. You need state-wise registrations. You need to maintain state-wise records, data. You have to furnish returns state-wise, and the number of returns has increased. Currently, you have one VAT return, one service tax return, maybe 3 service tax returns, 2 half-year and 1 annual, and VAT returns could be on a quarterly basis and 1 annual. But against that, today you will have at the minimal 3 returns, or rather 3 monthly returns at the minimal each month plus an annual return. So you have to, every month by the 10th, you have to furnish your sales data. And before I get into that, let me first give an introduction of how all this compliance would work. So for the compliance of GST, an entity called Goods and Services Tax Network has been created. Now, this is a body which is a public-private partnership. It's, for namesake's private, because the central and the state governments will hold 51%. Currently, they hold 49%, but it's changing to 51%. And some of the financial institutions like ICICI Bank, IDBI, and some others hold the rest of it. The state and central government and these financial institutions. Now, the purpose of this entity is to create the central IT infrastructure through which all GST-related administration and compliance will take place. So when this thing is created, which is under progress, you will register yourself on this GST network. You will get a login ID and a GST number for each state. You can log in there, and you can see all the information there, and you can feed all the information there. The dealer, your vendor, will furnish the data onto that GST network on its login, but it will be reflected as your purchases when you log in your account. And you have the ability to confirm what the information vendor has furnished, and basis that you'll take credit. So that's how broadly it will work, and all your returns will be filed through this. The tax payments will be done through this entire system. So it is a very, very robust and very, very efficient system that is being created. Infosys is the contractor for it. And we are advising the GST network from the technical input side. What should we do? And what are the important areas for us to look at? And those are these, broadly. You have to do an impact assessment of how does GST impact you in terms of your pricing on the finance side, in terms of your compliances, in terms of your compliance ability, IT readiness, in terms of your efficiencies or value creations that you could have in your supply chain. So that's one part, a complete assessment of where do I stand, what would I look under GST, what changes do I need to undertake, what is the degree of those changes, how complex that would be, what are the impossibilities based on my business model, how do I then do certain things manually. So you must have all those, identify those problems, have those solutions and be ready for compliance and ensure that, like I said in the beginning, no business disruptions, no additional costs. In fact, there should be reduction in cost, and that could only happen with a very careful planning and implementation of that plan. And there would be some open issues. Representations on certain things are being filed, and that opportunity is right now because before the law is finalized. So if there are any issues that we identify, it should be taken through industry fora or individually, as the case may be, to the government. I would say largely most of the issues or all of the issues have been covered somewhere or other in terms of what representations have gone to the government, and that is about 40,000 kind of line items or suggestions that the government has received. Some of the things, it is still uncertain in terms of concessions, like CSD supplies, will that exemption on taxes would exist or not? So those are open questions. So broadly, at the cost of repeating, you must know what is hitting you, what this new animal is. You must know how to tame it, and you must ensure that it is more like an opportunity for you, this entire disruption, and not an impediment to your business. That would be, I mean, in summary, the message. Yeah. Thank you so much. Thank you.
Thank you so much, Mr. Bhagat. We apologize for the initial technical glitches that we had, but we really appreciate you joining us here at the ET Auto Retail Forum 2016.